Good afternoon, everyone, and welcome to the European FX Daily Wrap-Up. Sorry about a 2-minute delay, actually a 3-minute delay. It's so slow that I even forgot about the webinar, or just about forgot about it. Saw an email pop up and as a reminder. But let's go on and go over everything. Obviously, with the Fed coming out, we're just seeing exceptionally slow activity to the point that, as I mentioned, I almost even forgot about the webinar. Let's go on and take a look, do a couple quick recap on some pairs. First and foremost, the cable. We talked about this yesterday. Obviously been mentioned here in the European crossover webinar that we do during European hours. But we've had this 2980. We'll take some time today going over, considering how quiet we are, so no need to rush. So we've been talking about this 2980. You see here, it's been a pivot. Whenever I put it, and the way I look at it as far as a pivot is when that area, and it's not a specific rule, at least with me, I just try and look at an area where the market seems to react with either downside movement, you can see here, continuous, or upside, or what we consider like a battle zone. You can see all the touches here. And I always run my resistance levels through the bodies because that's at least where I believe the most volume is going to be. So you can see the significance of 2980. It was a level that really, when we were way down here, seemed like it was going to be a level that would be very, very difficult to go and achieve. Eventually, we did make it up here. And once we got up there, you can see the significance of this 2980. We rallied up to that, worked almost like a magnet. And we stalled, and we paired back. And then we made another run up to the 2980 for a second movement here, and stalled again, paired back. Made another run up here for a third time, stalled again. And actually on the fourth attempt, we actually made that move. Now, one of the things that we're looking at, if we were to get that move beyond 2980, where would the market go to? And, there's talk about it could go to 136, it could go here or there. But just from a, medium-term technical perspective, where did we think it might go to? And my thought was it was going to be right here at 3208, because you can see here the different touches here. You see here, rally up to 3208, pull back, rally. Once we blew through it, we ran up again, but it ended up turning to be a little bit of a battle zone. We challenged it again, and then we had a good battle zone right in here. Look at all the challenging back to 08, rally back up, back to 8, a little bit below it, rally back up. And then we kind of, once we got past it and rally back up, you can see a good battle zone. They're fighting back and forth here. So that's where I came up with the 3208. And like I said, my analysis is simple in the sense that I just go with the levels, do incorporate Fibonacci, and that's the way I look at it. Is essentially the markets are moving from level to level. When they can, establish a foothold, then if they're going to move higher, where can they go to? And depending on how long they do stay here, and you can see here there's a good test here, had a nice hammer, then we know that movement on the rally back up in all likelihood isn't going to be like 100 pips or something. We can see a little bit further move, and you can see from here 2600, we made it all the way up here to almost 375 pips eventually. So one of the things, and the reason I mention that is because you can see here that we had this lengthy range that lasted well over 3 weeks. I think more like four weeks or longer. But you can see here how much time we spent up here. So one of the things I did was I measured the range. Okay, let's see here, and I've just extended it right here. Okay, now we did make it to 32.8. That was the intermediate target. We actually got to that yesterday. That was our bias chart resistance. We made it up to 32.15. But where can we push beyond that? Well, we do have the elections coming up. I mean, we could probably blow through this depending on how those election results come. But once again, just focusing on some levels. My thought is it's going to be interesting is if we are able to blow past this, whether we stall a bit in, here's the extension comes in at, put this here, comes in at 32.45 here, 32.45, and that's confluencing here with this level here at 32.65. So we actually had a pretty good, amount of confluence here, which we had the 32.08. Then we had 40, I think it's actually, I put 45, I think it's like 42, 45, just right in there. And then the 65. So we made it up to 15. We got some stops, but we'd already had a pretty good little run. And saw an article on Reuters, mentioning that these put options on the downside had been increased, like I think like threefold. I mean, it's something like they said there was, kind of odd. You rarely see this where a market is actually rallying and the value of the put options you think that would come out would actually be starting to fall down, had actually increased at the same token. I mean, so they're expecting potentially, well, that would be within reason, a good pullback. I mean, a pullback, but that would be within reason, but potentially a very good pullback. So the market is pricing in basically what could be a very upsetting, depending on what side of the market you're on, result. So, and we've had some mixed bags a little bit with the polls. One of the reasons we did get this pullback, 32.8 was the intermediate target, but it was, a news-induced pullback. What I'd say is because the YouGov poll came out and it wasn't as strong for the conservatives as many had expected. So we did go on and pull back. We had actually had our bias chart was our support yesterday, 31.01. So we came pretty close. Ended up holding pretty good as far as dipping back into today. But we've updated that, and bias chart support is at 20. I think it's 29.87. I'm at 29. I mean 30.87. I believe it's 30.87. Not looking at it right now. I'm doing some maintenance work in the background, so I don't have the bias charts popped up right now. But anyway, you can see us holding. But to me, it's going to be interesting if we do get this move above 32.8. What I'm going to be looking for is the reaction that we get here within this 32.65, 42, the extension of this range. You can see that. See that right here. Extend the range. Gives us 32, 44, 42, something like that. And then 32.65. So my thoughts would be, it's going to be interesting to see is if we do pop up, maybe we pop up even a little bit, we'll have to be honest, and then we kind of stall in here. Then we might get a short-term top. But once again, like I said, it's hard to say because you're looking at a big fundamental situation that if the election results come out and conservatives get a great amount of seats, well, then we could blow past this and maybe make a run towards this 33-40. But like I said, if results come in a bit of a mixed bag, like conservatives do win, but it's not as strong as some had expected, maybe it's not a hung parliament, but maybe we get just above, well, then maybe we can stall right in this area. So you got a level here and also a confluence in here that maybe the market might end up stalling, then maybe we end up paring back for a bit of a respite. I don't know, but I'm just saying that's just something to go and focus in on. We're going to move into the euro dollar. Now, the euro dollar had kind of held its own yesterday after this pullback. Now, we do have major support here at 10.20. That still remains our bias chart support. Actually, I think we've moved it up a little bit higher today in line with this strength, so I think we moved it up to like 10.54. But 10.20 is major. It's also coming in confluence in here with this trend line. The reason I thought that there's still a chance that we can still hold our own here is because, inversely speaking, the dollar index, because as you know, the euro comprises 56.4% of the cash dollar index. So they almost trade one for one on the other side. And one of the things we're looking at is, and I mentioned already yesterday and today again in the earlier morning webinar, we had that great number, 266,000. And then on top of that, for those that wanted to, downplay the number because the GM strike workers coming back, well, we had upside revisions for the previous month. So with that, wow, you would have thought they would have taken out this 97.89, which is that big, huge weekly pivot going way, way back. Pull this back. See how far this goes back. And we weren't even, forget close above it, we weren't even able to even touch it. So why my take has been is that since the start of the week is, hey, look, 97.20 is still in play, which was the level we were looking at if we got a a daily close above 97.79, and we did here. That's when the market closed. I think it was 97.74. So we got up close below that 79. Now we know that 89 was the pivot, but we've, gone back and forth on either side. So I said, if we do lose 97.79, it's going to open door for a further move down, which we did get. But I thought what would result in a move down here to 97.20. We did see the market kind of hold its own last week, and then we certainly saw a rally on Friday with those good NFP numbers. But it wasn't enough to take out 97.89. And the way I'm looking at it is we need a daily close above 97.89 to negate this downside action. Doesn't mean it goes bull market in any way whatsoever, a bull move. We would actually need a close above 98.65 to get us going back on the upside, but with bulls in full control. But the door's still open for a move down to 97.20. Tomorrow is ECB day, a big day in the sense that we do have Christine Lagarde. I'm thinking she's not going to come out to the extent as dovish as some may think, and that may result in a upside move for the euro. So just something to keep eyes on. Now we are seeing the Aussie finally start to pull itself up, but bias chart resistance is at 68.65. So we need, like I said, you can see right in here, we need a close above right there. And actually, this number would be very key here. We'll actually move this over here. Look at this. So that's 68.67. We actually need to get above 68.67 to garner further upside. I mean, we're holding. I mean, but the day's still young, but we'll see what plays out. But if we can get a close above 68.67, that certainly will be beneficial in the sense that it can allow for a further move. Look, this market's not really going to put any kind of real bottom in place until we get above 69.14. That's the real McCoy right now. Now, like I said, if we can get above 68.67 on a close, I think our bias chart resistance is actually 68.65. But if we can get a close above 68.67, it will allow some further movement. That being said, hey, look, we're going to have to get above 69.14 on a daily close before you can say, oh, this thing is on its way. Looking at the Kiwi, well, our bias chart resistance is 65.87, but this thing is really doing very, very well. After 5 consecutive upward, closes, we did go and install in here at the 65.54. The market even looked like it might be open to a lower move, but boy, look how quickly they picked it up, and we're still pressing up in here. But bias chart resistance is 65.87. We really need to get above 66 cents. If we do get a close above 66, and actually you can even make the case it's a little bit higher. You see this close right there? Right there. 66.05. If we get above 66.05, watch out. Then this thing could really start ripping up. But like I said, bias chart resistance today is 65.87. Has been since yesterday, which is the 50% on this move. But it's holding up very well in light of the movement we had. Potential that we could have dipped a little bit lower, and we just barely took out the lows and zoomed in. Bias chart support today, I believe it's the same as yesterday, which is 65.20. Take a look at the dollar CAD. Well, we on NFP day, we did have Canadian jobs also, and they were a disappointment. We rallied up, but we ran out of gas right there at 32.72, believe it. Yeah, 32.72. We pull back. You can see it's working lower. We're actually below support at this point. We had bias chart support, I believe, was at 32.05. You can see right there, 32.05. So let's go on and there we go. So right there, you can see where I came up with that, 32.05. So we're actually, if we close below that, it really opens the door for us to potentially come back here to 31.36. Now, Stephen Polas was supposed to speak today. The theme was the big picture. So we'll see. Maybe that may be having an impact. But like I said, things are relatively slow with FOMC day. Now, no one's expecting any major changes here, but what they are looking for is guidance going forward. So once again, I really wouldn't expect any surprises there either, because once again, we got the good NFP numbers. Overall, things are okay. Equity prices are still way up here. They're still buying into this deal that they'll get something resolved with China, and also the thought that they will not impose tariffs. I don't think they're going to on the 15th. That's keeping the spoos on the bid. So really, I think it's steady as they go for the Fed. I guess the key is whether they would say, hey, it's steady as it goes, looking 4 or 5 months out. Maybe that would spook the markets a little bit. I don't think they're going to go and do that. We'll take a look at the peso. And we're back here, slide below 1923. We actually had our bias chart support, which is 1916. Now, one of the things we talked about was also same thing, a big pivot here. Market got above it, slid back, challenged it, rallied back up, and look, after 5 straight down days, the market, was trying to make a stand at 1923.6, this pivot again. We had our bias chart resistance at 1932, and support is 1916, which is the same support as yesterday. We're actually there right now. If we were to get 2 consecutive daily closes below 1923.6, it does open the door for a move down here to 1908, right here. You can see right there. We shall see, but like I said, for right now, today's bias chart support is 1916. And the reason I had it so close, I mentioned that in the earlier webinar, also is, look, 5 straight down days. So that's where we are right now, literally at 1916. Dollar yen, quiet as can be. I think in the analysis I had for the Asian analysis stated was, it's just simply marking time. And that's what it's doing. We talked about, once again, here's another pivot, the 927. We know how huge that pivot has been. And once we got above it, the market stalled, and we had said that if we got a daily close below 927, we'd make a move down to 851, which is exactly what the market did. I think we actually, the following day after hitting 851, I think they exceeded it by 9 pips, and then we came back, and we're just trading rather quiet. Our bias chart resistance remains 887. Looks like we got to 886. So 1 pip shy of that. That's the 887 has been the bias chart resistance, I believe, since Monday. So 887. The downside, we're looking potentially for this market to move lower, and we're looking for 828, which is our bias chart support. Now, one of the pairs that we did look at on the cross rates, we took a look at that yesterday, and here we are again here, which is the sterling versus the odd. Wow, look at that. And my target has been 94.07. And I thought we might have got there, but I thought over the course of maybe 6 or 7 weeks, holy smokes, look how quickly we just about nipped it right now, which is another level I think that we can go in and take a look at once and see how this reacts in the elections. And my analysis here was, if we get past 90.58, I was looking for a move to 94.07. Look, like I said, I keep things simple. To me, it's level to level. So that's where I came up with the 94.07. There you go, right there. That's where I came up with 94.07. And the high yesterday, we'll pull it up right here, was, what was it, 90, I guess we can pull it a little bit closer. I think it was 93.89. Let's take a look. Yeah, 93.89. So pretty close, 94.07. Now, that being said, we have a confluence here. You see when we take this range, this high to here, to this low, this reaction, okay, to the high, to the low, 161% Puts us right there at 94.28. So you've actually got a nice confluence there. We're looking for 94.07. The market did top out yesterday at 93.89. We're looking for 94.07, which is our target, and that's confluence at 94.28, the 161%. Once again, once we get these results, it's going to be interesting. That's a level to look at. We might even blow past that. We might even get to 94.70 or something like that. But if we do stall in here, then maybe the market, we're looking for the market to take a bit of a pause. But we shall see. Moving on to the guppy. This has held up very, very well because even though we did get the YouGov poll results yesterday, we saw some weakness in the cable. That being said, the guppy is still holding up very, very well. So buy shot resistance has been and remains 43.36. You can see here, potentially a little bit of an overshoot can get us to, I think it's 44.11. 44.08, okay? But we're looking at 43.36 and got a rather stout trend line, and it's still holding above it right here. So my key is going to be, what kind of reaction do we see on this? But we should, so that's going to be the key. And with that, everything else is relatively quiet. SPOOs are still a little bit higher. We'll go and take a look at that. So you can see here, we're just kind of hanging around here. We've rotated between this 43 area here and 34. Right here. And let's take a look here with crude still holding not too far off of $59. And gold, we have seen gold finally. We talked about this yesterday. I don't think it was yesterday. I think it was to this morning, the European crossover webinar. That gold's still holding up relatively well. One of the things we were focusing on, and I wonder where the heck that went. Oh, okay. I didn't save it because I actually updated. We've actually got a trend line here. It comes in at 1456 right here, but we're actually on this is a Fed futures. I think we were focusing on 1458, and the spot is key for them to hold 1454. And we're saying this morning, gold's held up pretty well overall. I mean, yes, we're lower, but if you consider where SPOOs have been, it's still holding relatively well. And we actually have moved higher. We've actually gone to make a push in here after holding this whole area here, starting to tilt up to the upside. It's a market that keep an eye on because despite what the SPOOs are doing, let's take a look at that. Look how well the SPOOs, and they rallied up from the 3074 that we had talked about from last week, a key daily level. The market did rally up off that, and we're still holding up. Although it seems like you get the feeling with these SPOOs, it's kind of like the person hanging on at the ledge with their fingernails. And my point being here is, look how gold has holding up and actually starting to move higher despite SPOOs at these levels, although it feels like they're just hanging on by their fingertips. Gold is I think just something to look out going forward a week out, is that be wary if you start to see these SPOOs start to give in, you might see this gold really start to go and take off. We've done some yeoman's work down here in the Feb gold at the 1458 area here. You see down here, we've held that area here. There you go. See how many times this has been hit? 1, 2, 3, right here, 1458. And we had the opportunity to go in and sell off, which we did. Didn't even make it down there. Held this 1463, 1, 2, and 3 right here. And we worked out, we kind of rolled back a little bit, but guess what? We held above this key level right there. You see that? 1463, and now that's resulted in us moving higher. I just think that the stage is open, maybe not today, tomorrow, the day after that, meaning day after that being the trading day, being a Monday or Tuesday. But this market certainly looks like it's building up some good foundational, when I say foundational because we're here towards the slow range, building up some good value here as it's been tested a couple of times, not major, but tested. And so anyone that's long, they're stepping in, they're able, not only when they step in, they're not even being pressed under too much pressure at all. So it seems like this is an area where the market is starting to garner some placement, if you want to call it. And with that, if we do see these SPUs come apart, you could really see this market really start to take off. And these people that are long from down here, they're going to have some good positions built up, so that they probably won't be looking to release their positions. They'd be saying, hey, I'm looking for much higher, and that much higher would probably be the challenge of 1500 and beyond. But that's just food for thought. That's all we have for today, and good luck trading, and thanks for joining us here on the FX Daily Roundup.